Hi everyone, welcome to another important Shipmaster oral exam prep video. In this video, the question we discuss is what is the difference between P&I insurance and hull and machinery insurance? If you don't know, P&I stands for Protection and Indemnity Insurance. So P&I insurance is primarily intended to cover a ship owner or a ship operator's liability towards any third-party claims, and it excludes, so it does not include damage to the owner's own property or direct loss of the company. So P&I Club is run by a group of ship owners to protect the ship owner's interest. That doesn't mean if the ship owner is having losses in the business, they will be bailed out by P&I Club. The P&I Club is only there to protect the ship owner if any third party claims arise out of any kind of collision, so that the ship owner doesn't have to pay a hefty amount of money from their own pocket. That money is somewhat covered by the P&I Club. So the ship owner does not sustain a major loss to their own pockets. However, once the P&I Club does shell out money to protect the ship owners or the particular ship owners insurance premium increases. So they have to contribute more to the club. Hull and machinery insurance is basically insurance of the client's vessel as its primary asset. So just like you have a home insurance or car insurance, the ship owner is the client who can then generate an insurance for their vessels just to protect their assets. Now the two types of insurance interact in the area of collision liability and liability for contact damage to third-party property. So the hull and machinery insurance and P&I insurance are often complementary when it comes to collision liability and liability for damage to piers, loading cranes and other third-party property, generally known as damage to fixed and floating objects. Hull and machinery insurance may include cover for liabilities towards third parties depending upon the type of policy and scope of cover of that specific policy. Under the standard English hull and machinery insurance terms such as Institute Time Clauses hulls, collision liability cover has historically been limited to 3/4 of the own ship's liability towards the other vessel in a collision. Now if you don't know what this means, I will explain what does 3/4 or 4/4 mean. However, just to quickly explain, 3/4 means that if your own vessel was responsible in a collision or a damage to a property, then 3/4 of that payment is covered by the P&I Club. So the ship owner still saves up on 1/4 of that payment. As I go along, I will also explain what does 4/4 mean, but let's keep going. Now remember, under the Norwegian and German hull and machinery insurance terms, the liability cover provided is for 4/4. That is 100% of the own ship's liabilities towards the other vessel. So the entire cost is borne by the Norwegian and German hull and machinery insurance, the 100% of the cost if the own ship is at fault. Similarly, under the United Kingdom hull and machinery insurance terms, damage to so-called fixed and floating objects, that is objects other than a vessel, is not covered at all, whereas under Norwegian and German insurance terms, these risks are covered 100%. So that means if a ship was at fault and it goes and hits a fixed and floating object, the Norwegian and German insurance term will protect that ship. They will pay for the entire damage cost. However, the UK Club does not do so. Now ship owners or some ship owners have placed full, that is 4/4 collision liability under their P&I insurance. This collision liability cover would be the most comprehensive liability cover available, as all third-party liability arising out of the collision would be covered in principle. However, the ship owner would still need his hull and machinery cover to deal with the loss of or damage to his own vessel. So this means that, remember, if there is a collision and your vessel is found to be at fault, but it has caused damage to the other vessel as well. Now to repair the other vessel, all that money is borne by the P&I Club. They protect the ship owner, so the ship owner doesn't have to shell out money. However, the ship owner would have to shell out money to repair their own vessel. Now remember, under maritime law, responsibility for collision damage is based upon the fault principle. So a colliding vessel will not be held responsible for damage to either a ship or fixed object or wharf or jetty unless it is proved that it was the fault of the ship. So this is how normally insurance is determined. So it is determined based on the fault principle. So depending on the extent of the fault between the two ships, the payment is due. So sometimes it's 3 by 4, where the ship owner has to repair the other vessel, and 3/4 of that cost is paid by P&I Club, and 1/4 of it may be paid by ship owner, or it is paid in full, which is by 4 by 4 or 100%. So this is what 3 by 4 or 4 by 4 means. However, this is only the case if your ship was at fault. If your ship was not at fault, then the other ship would have to pay for the repairs. Now, Americans sometimes refer to such incidents as elision, but this is not a term used universally. FFO, or damage to fixed and floating objects, is the shorthand for striking damage under the English terms. The situation is more complicated when oil escapes from the other vessel as a result of the collision, as you can see on your screens. Under the Norwegian hull and machinery insurance conditions, these liabilities are not covered, whilst they are covered under German hull and machinery insurance conditions. The situation for damage and resultant liabilities becomes even more complicated if the vessel drags an anchor. So you can see a lot of this determination, a lot of this payment is determined by where you get the insurance policies from. So between UK, Norwegian, German, they all differ, and they differ even more depending on the different type of countries. I'm just taking these 3 countries for examples. Remember, the cornerstone of the P&I cover is that it responds to liabilities that are not covered under the hull and machinery cover. So anything that is not covered by hull and machinery is then covered by P&I, and they are both there to protect the ship owner's interest. It is important that you as the master and the ship officers have a full understanding of what is covered under the hull and machinery insurance policy, as this determines what is covered by the P&I insurance. The master will thus be in a position to understand whose insurer's representative or correspondent should be contacted in any given incident. So when you join a vessel, make sure you read the policy terms, you understand how comprehensive the ship's insurance is, how much of it is protected by P&I and how much of it is protected by the hull and machinery. You will often find that on ships, P&I Club often sometimes comes and does inspection of the vessel to see if the vessel is maintaining its equipment, structure, and other things in good condition. This is because the P&I Club, when the ship joins the P&I Club, it is the responsibility of the ship owner to also maintain their ships under seaworthy condition. So this is the difference between hull and machinery and P&I insurance. If there is something I missed, please let me know. I try to keep these videos short and try to keep them simple and not very boring, because marine insurance can be very boring, very complicated, especially for mariners like us. We are not experts. So this topic is only for a mariner's understanding to answer questions in the oral exam. This is not going to make you an expert in marine insurance. Thank you for watching today's video, and bye for now.